You've probably heard the phrase passive income tossed around on the internet, but is it really too good to be true? In a world full of crypto scams and e-commerce courses, I'm here to show you the tried and true strategies that millionaires and billionaires use to create truly passive income. Do you dream of turning your savings into a passive income powerhouse? If you got $1 million in the bank, this video will show you how to put that money to work so that you can make passive income while you sleep and spend your waking hours doing what you love. Stick around until the end of the video to discover how to best invest $1 million for maximum passive income. Let's first start off with diversification. You absolutely have to be willing to diversify across asset classes. And what I mean by that is you've got to be able to look at different types of investments that are non-correlated. So you've got stocks as one category, you've got bonds as another category, and then you've got real estate as another category. And so within each of those areas, you have different types of investments. Stocks, you've got more preferred or dividend producing stocks. You've got growth stocks. So again, passive income, you're going to be better weighted towards more income oriented stocks. You've got bonds. Again, you've got government bonds, you've got corporate bonds. And again, depending on your risk profile, that's going to affect what that return looks like. Real estate, you've got the real estate syndications, multifamily, storage units. There's a diverse element of real estate that you can choose from. But the key component is to make sure that you're taking those funds and properly diversifying in accordance to your risk profile and then also according to your income needs. With that in mind, let's first dive into REITs, real estate investment trusts. Now, again, I was a stockbroker and a money manager for 15 years. Now, I exited that and sold my company in 2006, really stopped practicing, if you will, in 2003. But I'd had my own share of selling real estate investment trust or REITs. And so, what a REIT is, they can be private or public. The majority that are accessible to the general public are what are publicly traded REITs. And this is where an investment company is forming this real estate investment trust. They're setting a dividend schedule of how much they're going to distribute. And then they go out and they buy a variety of different assets, if you will, whether it's office buildings, apartments, commercial real estate, plazas, malls, different types. And so there's benefit to it because in that you can have diversification. The downside about it is that, sometimes you have a limited understanding of who the manager is, what their skills, capabilities are, or it's also such a vast, large institution. Now, the other thing, and again, I'm not knocking the industry, but again, back in the days when I was involved with it, you saw there was different pay structures for different REITs, right? So like this one paid more commission than this one. What do you think sold more of, right? So again, you just need to be aware of that when looking into real estate investment trusts. One, how is it being sold or promoted? Two, what is the skill set of the operator and the corporate structure? And then three, also understand that because it's publicly traded, it can have volatility, meaning you put in 100,000, that 100,000 fluctuates in value, but yet you're still getting that distribution per the distribution schedule. Another area that you can look at for passive income is private lending. Now, what this is that you're actually lending money on real estate-based transaction as a private mortgage. Now, I know that we've got this in the category of passive, and it is, but there's a little bit of work in getting it set up, right? And so what I mean by that is if you're loaning money to an individual, you do have to, one, find the individual, find the deal, and then in turn, make sure that the deal, you're not loaning too much money on it. You don't want to probably be above 80% loan to value on the project to give yourself some cushion. And then you also want to ensure that your borrower is going to be able to financially afford to pay it back. And there's different options within that. Some people do private lending to people who are going to occupy the property and use it. Other people, as one of our investors in our testimonial, he does also private lending, but it's more so to real estate investors. So there's different categories that you can look at. There's also peer-to-peer lending platforms that are available where you can lend money to generate passive income. So it is passive, but it's got a little bit of work. Once you get it set up, now it's coming to you in a passive manner, and then you can reap the benefits. If you're enjoying this video, make sure give it a like, subscribe to my channel, and comment down below what you'd like to learn next. Dividend stocks is another category, and you want to look at these, first and foremost to see what is the quality of the company. Some people make a mistake of looking at, hey, this one's paying this much dividend. Well, look, the dividend ratio is important, but I would tell you this, what's even more important is the actual underlying strength and quality of the business that's generating the income to pay the dividend. Because they could say, I've got a high dividend, that's to attract you in, but if the business model is not strong or their market share is declining, you're most likely in a declining investment. And that's not what you want, because really the dividend is just a function of your return. You actually are investing a significant principal, call it $100,000. You want to be concerned about the retention of that principal amount. So you're selecting companies that have a good dividend, have also a dividend track record. How long have they been a dividend producing stock? And then what type of industry are they in? Is it a growing industry or is it a declining industry? And then, again, lastly, looking at the company itself. Are they a well-run company? Do they generate good and sufficient profits? Does it look like a good opportunity ahead? Dividend stocks can work for people, but for some, it's also a challenge because, again, because it is a publicly traded stock, your actual value of your principal amount can be subject to wide fluctuations, because even as an example of this, last year in 2022, the market on average was down about 20%. That in a declining market, it's also affecting and pulling down the value even of the dividend stocks. It's kind of the old saying, a rising boat lifts all tides. A rising tide, rather, lifts all boats. Same thing, as the market's declining, it can bring down those things as well. And then also you run into the individual risk of the individual company. If they're not doing well, that also is going to be reducing the value of that principal amount on a share price. So again, it doesn't work well for all people all the time. Real estate rental properties, people have categorized a lot of times as passive. And I want to caution here because, again, it really is, if you're going out and buying a single family home as a rental or a duplex or a triplex, it's not really passive. You're dealing with tenants, toilets, headaches. There's the difficulties. You also have to pay the bills with the mortgage, the taxes, the insurance, any damages and repairs you've got to coordinate to get fixed. So yes, real estate is a great vehicle, but I don't think it's a fair thing to call a singularly owned rental property a passive income vehicle. On the other hand, multifamily rental properties are truly passive. So when you look at that, our company, we buy 75 to 500 unit size apartment complexes. And when you invest in one of those apartment complexes, you get all the benefits of direct owner of real estate, meaning access to cash flow on a quarterly basis, access to depreciation, meaning you're an actual owner, so you get the tax benefits of the depreciation, which helps offset your income. You get the value of appreciation because the property's growing in value over time, and you get the benefit that the mortgage is being paid down by the rents that are being collected. All of that are the benefits. The headaches, the actual sourcing of it, the operating of it, the collecting of rents, none of that trickles over to you as a passive investor. So multifamily rental properties on a larger scale, that truly can be a great passive investment. One of the things too is a distinction with multifamily real estate is if you as an individual go out and buy an apartment complex, it's not truly passive. And what I mean by that is there's an active role that's played in managing the management company, making sure that the objectives are being achieved, versus where a company like ours goes out and buys an apartment complex. We syndicate the opportunity for people to invest with us. You're now truly in a passive position because you're getting monthly reporting on the activity and all the work that's gone on, and then quarterly distributions related to the rental cash flow of the property without having to do the day-to-day work involved with it. Hey guys, I have a free gift for you in the description on this video. I'm here to keep you informed so that you can make the best decisions when it comes to investing your hard-earned money. I'm giving you my free guide to investing in multifamily real estate, which gives you all the insights I've gathered over the past 20 years of investing. Click the link in the description to download it. That's all I have for today, folks. I hope you were able to learn a lot today, and I'll see you in the next video.